Today I'd like to talk about Japan after the tariffs were put onto them and the issues that they face with their monetary policy kind of unwinding here, and does it have implications for us, which of course it does. So first, here's the tariffs. They're 15%, anything coming in, and they said they're going to buy some rice and corn and soybeans from us and buy some Boeing jets. Basically, the 15% is the critical thing. The reason why this is critical is that the 15% of tariffs can slow down the economy, and this is where the issue comes for Japan. They're only growing at 0.7 or 1%, and this is going to drive down their currency. So here's the currency. So you can see there, last Thursday, UDITA, the BOJ, Powell, came out and said he's not going to be raising the interest rates in the near term. And immediately the Japanese yen declined to 150.50 and a half. Then on Friday, it rallies all the way down to 147.36. Today it's 147.11 or 10, somewhere around there. The only thing I'll say to this is they didn't raise the interest rates, so that means they intervened into the currency market and bought the Japanese yen to send it up. Now, anybody who follows this channel knows that, one, your economy drives your currency. When you're in trouble, you then use interest rates and buybacks or selling to control the currency. So this is not a good sign for Japan, that literally on the first day they're intervening into their currency market. Now, Japan has said, look, we're worried about our yen at the weakest since March. And the reason being is America has told them that we're going to declare your currency manipulator. We believe the yen should be between 125 and 130. And of course, it hit 150.50 on the fly. And the reason being here, you can read the last paragraph. If the BOJ is not going to raise rates, there's a possibility the yen could fall to 155, like immediately. Again, the last paragraph here, the Japanese government will take all necessary measures to mitigate the tariff impact. And we also thoroughly analyze the effects of tariffs on Japan and based on the other series of trades and developments in other countries. So you can see the issue Japan has right off the bat, all right? They're growing at 0.7 to 1%. Now the tariffs are coming in. 6 months ago, the Prime Minister ruled out any kind of economic package to push the economy because he said we have to issue debt. And as everyone knows, Japan is number one in the world with about 250% of debt of GDP. America is 120, to give you an example. And look at how we're freaking out. They're 250. So they can't juice the economy by having a package, a fiscal package. And so that leaves them down to the three things you can do. You can buy and sell your currency, you can raise the interest rates, and you can drive the economy, but they can't drive the economy. But the BOJ also has other issues that they're facing. One of their large banks for farmers and fishermen, Norinchukin, I know that's not correct, I apologize, just lost $12 billion selling their U.S. treasuries. So you can stop and read this, but basically they had purchased about a little less than 121 billion of U.S. long-term treasuries, which were down because we raised our interest rates 6 times, and they got caught. And so what they did is they crystallized them, meaning they literally sold them instead of just holding them on their books at a loss, and they're now booking a $12 billion loss. And this is where it gets a little dicey for Japan. They were using a form of the yen carry trade, okay? And this is where they borrow in Japanese yen, where it has the low interest rates, and then they went and purchased U.S. treasuries that gave them a higher interest rate. But then when we raised our interest rates, it also gave them losses. So something must have happened where they didn't have enough capital to maintain the position, because we all know Trump's trying to lower the interest rates, but they could not hold it in. And in late 24, October 24, they sold their positions. And if anybody remembers, The bonds took it. That was that Monday. This was probably this bank. Now, there's been rumors on this bank for months and months and months, and which of course were all denied, but now we know they're true. So when we had that little yen carry trade, whatever you want to call it, downward spiral there for a day and a half, it was probably coming from these guys. But they're not the only ones. We know that the Japanese insurance companies have unrealized losses on their domestic bond portfolios that is approximately $60 billion, okay? So think about it. This bank just took a $12 billion. Here's all their life insurance companies under $60 billion, but this is a little different. It's because their long-term bonds went from basically 50 basis points, 60 basis points, up to 1.5 and up to 3.11, and the 40 years at 340. So this is what's happened. They now have all these paper losses. And if you think about it, America has declared that Japan is a currency manipulator. They want the currency between 125 and 130. There's only really one way to get it there. They have to raise interest rates, but Yudita last Thursday said he won't raise interest rates. So down goes the yen, so they have to intervene on it, which is not good. Why is it not good? Because the BOJ just prints more yen to buy the yen. That's why it's not good. And so what are they going to do? And by the way, the insurers have $60 billion worth of losses. Think of this. The BOJ owns 55% of all Japanese government bonds. 55%. So way, way, way more than those insurance companies own. Fact is, people think that the Japanese bank's looking at way over $1 trillion worth of losses on their bonds, on their books. So now you can see that the Japanese own $1.1 trillion, which is either slightly ahead or slightly behind the Chinese, or they're going back and forth right now. But what we're worried about is that they will sell their U.S. treasuries to bring them home to take care of all the issues that they have at home, all right? And you saw Besant 2 weeks ago flew to Japan, and out of that meeting, we came up with a currency swap between the yen and the dollar. So the Federal Reserve is lending the Japanese Federal Reserve, the BOJ, dollars so that they can meet all the losses in their portfolios. Because remember, everyone trades in the dollar. They don't trade in the yen. So Japan has a myriad of issues facing them. Their insurance companies and banks are loaded with U.S. treasuries that are at a loss. And if you read through the $60 billion that the insurers have, that would come out to about $720 billion in treasuries that they would have to sell if they decided to sell and take the loss. I don't know if they will or not. I have no clue, okay? Then you have that everyone expect, and as of till last Thursday, that they were going to raise the rates again. But then Japan is looking out and seeing that their banks and insurance companies are also at major losses on the JGBs. So they can't do that. So what does Japan do? That if we won't let them lower their currency so they can spur their economy, and they don't want to raise their interest rates, will drive their economy lower because of the tariffs, what do? I'm asking you. You're the head of the BOJ. What do? You can't issue more debt. Can't raise the interest rates. By the way, if you raise the interest rates 1%, that would double the annual fiscal deficit for Japan. Double it. And then top that off. These moves by the BOJ, is making the yen carry trade more and more expensive, if not unprofitable. And so thereby, we could see the yen carry trade break for a multitude of reasons. One, they need to sell to bring home. Two, the yen drops down to 150, 155, 160. That'll break the yen carry trade. It could rally to 125. That would break the yen carry trade. What do? I have no clue. Tell me in the comments, and like and follow.